This is the weekly chart for the Great British Pound against the Japanese Yen on eToro.com. What you're looking at is a breakdown of the price data going back a few years now actually. This shows the beginning of 2017 to the start of 2020, 3 years worth of data. Each candle represents basically the highs and lows and the open and close price relative to the close price of the previous week on the weekly basis. What I've noted here is that these lines represent the upper and lower channel of a downward trend in the marketplace, which has been in place since the beginning of 2018. What this means is that these high and low levels are very likely to be respected going forward, meaning that they can be counted on to serve as basically parameters whereby you can expect price to move. What we're looking at is a downtrend, and furthermore that's substantiated by the 50-week moving average, which is this red line runs through the middle of it. This gives you an idea where the price is going on a year-long trend, and it's probably one of the more reliable indicators you can actually use. So currently price is above that 50-week moving average, and that line is flat. The price is also at the top of this downward channel, meaning that I expect it reasonably for it to move lower on a weekly basis going forward for the foreseeable future, until of course it meets the bottom of this channel again and it either escapes the channel and continues downward or resumes up. But that's in a general what you might call a wave, so it's more than likely going to go down and then resume back up over the course of months and then back down again, but always trending lower. The reason that I suggest you look at the week-long charts is that it gives you a much broader idea of the marketplace, where it's going in general. And when you actually were to take a trade, it's my preference to move to the 4-hourly basis, looking for current price action that suggests that the price is going to move one way or the other. What this shows here, these six candles here, is all the price movement so far between the beginning of the week and on the 26th of January at approximately 2300 hours GMT, and the current time, which is just 5 to 8 p.m. Greenwich Mean Time. This candle here is about to close, which is the currently 4-hour candle, and what this represents to me is that the price has gapped lower, it's opened lower, it's moved up, it's found a significant level of resistance here around the 142.72 level. That's what I'd call a rejection, and the following three candles have just moved lower. Now what's more significant is this final candle, which is due to close now in the next 5 minutes. That's what you call a pin bar, where the upper part, the wick, is significantly bigger than the smaller body of the candle, and that suggests that there's momentum downwards going forward. So therefore, on this basis, it's my intention in the next 5 minutes to actually open a trade selling the Great British Pound versus the Japanese Yen, with the expectation that it will move lower. I will set, let me just demonstrate what I mean. The stop loss level will be here, and the entry level ought to be here. Now I've already pre-calculated this, and it means an 8% loss should I be wrong, and that means that I ought to actually calculate where the take profit ought to be to return 16%. That's double the risk. The idea of doing so is to actually ensure that even if you were only right half of the time, you'd still make money and return on investment, because when you win, you're making 10%, for example, whereas you lose 5%. If you were only right half the time, you would get the difference between those two figures. So goes the theory. I've calculated that a reasonably expected take profit area would be in this area, which would return approximately 16%, therefore double what is actually being risked. And lo and behold, it actually very well coincides with this area of support, which has already been rejected by price, and it resumed upwards. It is reasonable then to expect that this area is going to draw price down towards it as well, because the price has already retreated to that position. So what we're looking at general weekly trend, a channel whereby you can draw the parameters of highs of lows, should run parallel, and then to eliminate risk we focus on smaller key sets of data, and from there we can then determine where we actually want to place our stop loss and take profits. You're not always going to be right in Forex. If you were, you wouldn't need my help at all. But the idea is you're just eliminating risk, demonstrating rationale, and going forward we simply hope to consistently make returns, and by having this rationale in place it will give you the confidence you need to actually trade. You can see all the trading action that I'll be doing going forward on my eToro profile, which is linked in the description, and if you would like weekly analysis, please refer to my Patreon, also linked in the description. Thank you again for your time.